that aspiration of double-digit kind of EBITDA margin for the coming year, with improvement also in profit after tax.
Got it. All right. And yeah, I think this is it.
Thank you, Darshika.
Thank you. Next question is from Mithun Aswad from Kiva Advisors. Please go ahead.
Hello.
Yeah,
Hello.
go ahead.
Can you hear me, though?
Yeah.
Good afternoon, sir. So just wanted to understand, out of the 1,350 crores, could you give us a breakup between the three segments for the full year? And within those segments as well, in the batteries, if you could give between alkaline and carbon zinc. Within the flashlights, the rechargeable as well as the chargeable, this would be useful.
Okay. We had answered part of this in the earlier part of the call, but I would, at the cost of repeating, say this again. So our overall mix of turnover is like this: 65% batteries, 12% flashlights, and 23% lighting. Of that, of the batteries, about 94% is carbon zinc, 6% is alkaline, and of the flashlights, about 60-40 is battery operated versus rechargeable.
Okay. 60 is battery operated, huh?
That's right. And that is the one which is degrowing, and that 40 is slated to grow. So we would very shortly see 50-50, and then, the mix changing towards the rechargeable flashlights.
Got it. And just a follow-up on this, since 94% of the batteries is in a low-growing segment, and the 6% is where you're seeing the growth. So we will face challenges on overall growth, right? Because it's only when the alkaline comes to a certain stage where it becomes a reasonable part of the overall batteries, are you going to see overall revenue growth for the company. Is that correct, or?
So battery traditionally grows at around 4-5%. This year was an aberration where, due to the rural side of, I think we have spoken enough, we did not grow. We actually had a slight deflation. Alkaline is where we are going to grow, much beyond, what we would, what one could normally consider. So as I said, we would like to grow 100%, so that 6% will become maybe 10%, 12% in the coming year. So we are still feeling that it should be quite all right for us to grow at 5%, given the very high share of carbon zinc in the mix. And that is how we are making our budgets and plans. That is a reality. I mean, we cannot go away from that.
Understand. And in the rechargeable flashlight segment, is that growing reasonably well, or that is also seeing some pressure?
That has a growth of about 10%. So see, the first is that we have to come up to a particular size. As I said, the combined market share is about 20-21% for us. So, obviously one part of it is degrowing sharply, which we need to arrest to the extent possible. But I mean, it is not really in our hands, because if the consumer has decided that it is better for him to go for rechargeable, we have to play the game accordingly. We have really brought in a slew of products. We have, really, and we'll continue to do so. We are going to communicate. So we feel that we will grow much faster than the market. Even given all that, the degrowth of battery operated and the growth of rechargeable, we estimate that we will be growing between 10 and 12% in the coming year in the overall flashlight segment.
Right, sir. So just one last one on the margin. We've seen zinc prices also move up over the last quarter, while the last year was reasonably okay. Do we face challenges? Because I think even an alkaline zinc oxide is required for manufacturing. So just wanted a sense on that, how you see margins, because that's your largest category. Do you see pressure on margins in the next couple of quarters, or have you taken any price rises to offset that?
One is how we manage our raw material. So I think, we take coverage, so that we can plan things better. And if, let us say, that becomes a reality, because I have also indicated in my opening remarks, I do not know whether you had a chance to listen to that, we think that there is some amount of volatility that's going to take place in the commodities, which we have already started seeing. If that happens, we have a decent period of time to plan things and to mitigate that. And obviously, the only mitigation would be, that we take price increases, for which we will have adequate time. So we are not really unduly concerned with that. I mean, we have to, in some parts of any time, live in a high inflation period, and sometimes, be happy with some deflation taking place like it happened last year.
Sure. Thank you.
Thank you. The next question is from the line of Priyankar Sarkar from Square 64 Capital Advisors. Please go ahead.
Hi, good afternoon, sir.
Good afternoon.
There are a couple of questions. Could you please break up the EBITDA margin of the battery business?
EBITDA margin of the battery business, meaning what? Meaning
segment-wise. Sir, the lighting business is about to break even. So I wanted to know for 65% of the business, what is the margin they are earning on that part?
Okay, so roughly, I'll tell you, about 15.5% is batteries, about 9% is flashlights, and lighting is slightly negative, towards break even.
Right, sir. Okay. And sir, could you also please give an update on the court case, please? Because last time you sounded pretty positive, but there's no commentary thereafter from your end. So just wondering on that, please.
I'll request Vivek to update you on this.
Yeah, sure. So, the case which is there is for the KKR. I'm sure you are asking for that case, right?
Correct.
So the matter is still adjourned as of now. We expected that matter should close. Now, as you know, this matter is not at all KKR. KKR to it has gone to InCred, and InCred has now handed over to some other finance companies. So now we are awaiting date. I think July is going to be a next hearing. So it is the status as of now.
Okay, fair enough. And I have one last follow-up question. So if we had to put up a capex of our own for the alkaline part of the business, what would this 15.5% margin move up to once it reaches a, good utilization level?
So, it is very subjective at this point of time. The machines are of a big size, right? It started at 300 to 400 million pieces. And currently, if you are seeing that we are sitting around the 40 to 50 million. So initially, the focus would be to stabilize the product. And of course, there will be a cost benefit. Just to tell you, if I start manufacturing, there will be, for the alkaline part of the operation, 8 to 10%, the margin will improve for the alkaline part of the operations. But alkaline is 6 to 8% of the total operations, right? So you can get it out that more and more alkaline increases. So once we start doing a domestic manufacturing, 8 to 10% margin will improve for the alkaline part of the business.
Perfect. Okay. Thank you very much. And wish you all the best.
Thank you.
Thank you.
Next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah, namaskar, Shubham sir, and thank you for the opportunity. Sir, firstly, we see the employee cost as a percentage of sales still hovering higher. So when you are alluding to these facts that going ahead, we are anticipating good numbers in terms of revenue and profitability for the current year. So what should be the employee cost as a percentage of sales? Should be penciling in for the year now?
Okay.
Vivek, would you like to take it on?
Sure. So you are absolutely right observation, but if we could see that from the last year to this year, our revenue remains stagnant, right? So what is the growth you see? It is basically the inflationary growth got to the employees. So now since we are looking for this year, the current year, certain high single digit growth, we would like to see not to exceed this percentage, right? If you see we are hovering around 12%, and ideally we would like to remain equal to or lower than that percent for the FY25.
Okay. And sir, I think so Bain and Company were given a project on the basis of which some benefits over the long term were to be accrued to the company. So, where are we in terms of the implementation, and when are we going to reap the benefits, if any?
Again, I think the entire lot of conversation, as Subhamoy has already spoken about RTM, what the project Bain and Company has taken over is the RTM. So it will be a quite long term, like whatever the implementation, learning and the challenges we had, we are just yet getting out of that. Maybe by the next quarter we'll get it out. And I think after that we'll start getting the benefit. I think this is the discussion we have.
Right, sir. Mr. Shah, you are mentioning on the fact that from second half, we are anticipating good growth going ahead. So, the two factors on the basis of which you are seeing growth are monsoon and this BIS standard being implemented, or what are the factors which is giving you the confidence that things are going to be much better from second half?
Okay. So one is that we expect the rural demand to sort of have an uptick. That is first and foremost. The second one is that by say the second quarter end, we would have really ironed out all the challenges that, or the different difficulties that we faced with the RTM. So, any drag whatsoever that we had from the RTM would be also not there. Plus, the value erosion of the lighting segment, which was highly prevalent during this FY24, in our estimate also should not be there. It is still there a little bit in this quarter, but from second quarter onwards, we estimate, but of course, it is very difficult to, say if there would be again another breakthrough which will be passed on to the market. At this point of time, we are not seeing that. So based on all these factors, the demand, our RTM, the valuation being, arrested, all of that will culminate in higher level of growth in the second half.
Okay, but there has to be that has to be a volume-led growth, not only value-led. It has to be volume-led only, then only it will translate to.
Okay. Yeah. This year also, which you are not being able to see, we have very reasonable and I would say satisfactory volume growth in the lighting segment. Unfortunately, that got completely eroded due to the value erosion. So I take your point. It has to be volume-led, not just price increases.
Right. A small point, sir. Firstly, would like to congratulate the board on the dividend declared for. I think so. It's a high test of 5 years, after which investors' interest and have been looked into with a dividend payout. So that gives a clear indication of wealth creation being the outlook for the board. So I congratulate the board for this decision. And on one bookkeeping question, we have seen there's a refund of income tax also to the tune of 10 crore. So if you could explain what is our current tax rate, tax outgo, and if you could explain the reason of this 10 crore nature. Any other assessments are due wherein we will be receiving cash going ahead?
So this is currently we are under the MAT, okay? So because we have an Assam plant where we have ATI benefit, so we are currently under the MAT. So rate hovering between the 16% to 18%. And this is the refund of pertaining to 2021, where we have paid the advance tax and that particular year we have taken certain write-off. So that is the refund we got the current year. So it is 23 crore we got a refund, and there are some current year taxes. So net you are seeing 10 crore. So that is the refund here.
Right. Thank you for all these feedback, sir. And for the forex impact, I think so earlier we used to highlight what was the forex impact. So if you could just give a color on how have forex behaved for this quarter and for the year as a whole.
So forex, so forex pretty remained steady. If you see 83 to 83 and a half, this remained very steady, and we are taking a very long-term coverage, not a very long-term 4 to 5 month coverage we are taking, because it goes hand in hand with our zinc coverage also. So we are keeping a very close eye, but dollar was since pretty stable over a period of last 6 to 8 months. So we did not have much adverse impact because of that.
Right. Right, sir. Thank you, sir, and all the best. Thank you.
Thank you, Saket. Thank you.
Thank you. Next question is from Ravi Gupta. I beg your pardon, from Rajiv Gupta from RBC Financial. Please go ahead.
My question was on the RTM transformation. Are we now very confident that we are done with it in this first quarter? We are already into the end of April. Are we almost there? Are we 99% there, or is there a risk that we come back next quarter to hear that our RTM transformation is going to further take away another few quarters? Where do we stand on the RTM quarter? That was my first question. On the RTM transformation.
Shall I respond to that?
Yes, please. I'll appreciate that.
So, I wish I could give a specific percentage. Unfortunately, I cannot. But I think it would be safe to say that by the second quarter, we would have ironed out all the, whatever we call it, pitfalls or challenges, whatever disruptions that we have faced, all those would be ironed out. And so the RTM would start paying rich dividends from the second half. That is at this point of time, because there is, of course, our internal target is to iron out everything in the first quarter itself, but I don't want to sort of commit on that to you. For the simple same reason what you mentioned, that in the next earnings call, you should not hear of another extension.
Okay. My second question was that assuming that all the lighting issues and the RTM gets sorted out, what is the company's aspirational CAGR growth plan for the next, say, 25, 26 onwards? What is the company's aspirational growth plan considering battery, where battery is, lighting is? I'm talking about a 2-3 year perspective starting 1st April 26. 25.
So I think what would be safe to assume is a 5% kind of growth in batteries as a total category, 10 to 12% in flashlights and 20% in lighting. This we can see for at least the forthcoming, say, certainly FY25 and maybe, 2 more years. That is how it looks like to us at this point of time.
And on a current base, what would be that turn out to be in terms of a weighted average?
So I would say that, given that we are at around, say, 1350 odd, so I'm taking rounded numbers, I would say we would go on to, say, about 1800 crores in the next 3 years on these 3 categories, including FY25.
So that makes, including FY25, are you talking 3 years or 2 years?
Yeah, 3 years. 3 years. FY25,
1352 and 27.
Yeah.
Okay. One last question. The information on the KKR loan has not been forthcoming. You were about 3 quarters back, you were very confident and sure that that it is about to end. We should have some news in March, Now, we just get to know it's a bland statement by the management that it is adjourned. I'm sure you have a better idea at the end of the day. This is a shareholder issue. It's not, you should really have a little more information on the status of this arbitration. It normally doesn't go on this long. One does hear that the former promoters are planning to retire the loan. There are negotiations on. Some of them have come out of their financial trouble. So why don't you for information, a little more crisp, clear communication on this to the shareholders?
I'll give you, unfortunately, what you term as bland is what is available on public domain, and we can only, obviously, you would appreciate on an earnings call, we can only provide information which is, in the public domain, because all of that is not controlled by us. So the arbitration panel had set a timeline whereby they set various dates for various, activities. So the final hearing is slated for a particular date in July. I forget the date. However, in between, again, this is public domain information. Originally what was KKR was bought over at a fraction of the cost by a company called Incred, and then in turn bought over by another company called Real Touch or something like that. I forget the exact name. It would be for this new incumbent to decide how he wants to sort of see things pan out. We maintain, as we have maintained before the arbitration panel, that Eveready's sort of liability in this is zero. We played no role in the facilities being provided to the erstwhile holding companies, nor were we aware. Our stand is clear, and we believe that we have a clear case, and we'll see how it plays along. But it is possible that it may come to some settlement, because people still try to, after all, it is going from one lender to the other. Hopefully, some settlement will take place.
Okay.
Otherwise, July remains the final date of hearing.
July remains the final date. Okay, good to hear.
Yeah.
Now, my last question, on 1350 to 1800, we are, about RTM getting settled. If I make a simple mathematical calculation, 1350 goes, if under 10% or high single digit goes to 1500, 1650. We are talking digit growth, a high single digit in about 9.5%. If I compound it for 3 years.
Yeah.
Then what we are saying is that our aspirational growth remains single digit for the next 3 years.
So we are
after having spent all the time and money and effort on our RTM and our RTM becoming fully operational this year, but we are still talking about single digit growth.
No. So we are, first of all,
I'm just doing it mathematically. This is it's just a maths. Yeah.
It's all right.
We are still talking about 1800 3 years from now.
Yeah. What you say is right. We are talking of a 10% overall growth, right? Whatever may be the individual components of 5%, 10, 12%, and 20%.
Right.
We have all along said, and we have just shifted that goalpost because of all the challenges that we have always maintained.
I appreciate. I'm starting with a 1350 base now. I'm not going back to history.
No. Just hear me out. We have all along said that for us to reach a higher level of turnover at some stage during our journey in the course of the next 2-3 years, we have to look at new categories. Now, we had very much aspired that we would start planning this new category sometime around this year, meaning somewhere around FY25 we would crystallize our plans for a new category. But today, the way things have happened, we feel that we first really need to consolidate ourselves in this year and talk of. So 1800 in 3 years, what we just now talked about, is from the 3 categories. There would be a component and in which this RTM would be helpful. This RTM is not just meant for batteries or flashlights or lighting. I mean, it should be amenable to take on other categories. So, every product categories have a particular, capacity to grow. So we are taking a realistic view whereby we aspire and do not put aspirations beyond our reach, and we grow realistically, but also keep scope for newer categories to be inducted, which we plan to do.
Got it. And how far have you where have you pushed back the goalpost for the future categories in terms of hitting the top?
So, we were quite hopeful that by FY25 we would have plans ready to launch a new category, at least. That we may have to shift to the next financial year. And
so
we
launching would be 26, 27?
26, 27 could be a realistic time when we can think of a new category.
All right. Thank you very much.
Thank you.
Thank you. The next question is from Keshav Garg from Counter Cyclical PMS. Please go ahead.
So the performance of the company is disappointing. So the guidance of the management is not credible. And sir, your aspiration is also disappointing. So what happened to the doubling the revenue in 4 years or from 1,200 crore base? I don't know, sir, what happened. I hope that going forward, even the lukewarm aspiration is not underachieved. And sir, if we see our receivables in the past 2 years have doubled, and sir, the revenues have hardly moved up. And sir, I am very doubtful that we still hold the 53-54% market share in batteries, because if you see our competitors which are listed, at least their third quarter numbers are available and they have grown something like 13-14% in the third quarter, whereas our revenue has declined. So any comments on these issues?
So, first of all, thanks for all your scathing comments. We have really, as I said, we are not deviating for our end goal of achieving doubling our turnover. We have only shifted the goalpost by 1 year. Even when we had articulated the original, doubling our turnover aspiration, we had said that we would require a fourth or a fifth category. So, to say that, our aspirations are very disappointing at this stage, I personally do not agree with that comment, but so be it. I mean, you are, of course, free to choose your own opinion. And so, we remain on course to, as we discussed with the previous speaker, we remain on course to achieve at least going up to 1,800 odd in the next 3 years' time, with very realistic, growth targets. And as I said, we need to bring in a new category, if not two, to make ourselves to that, 25 or 100, which we had set about. We have just shifted it by 1 year due to, multiple reasons, which I think I have alluded enough in the earlier part of the call and also while responding to queries. Thank you.
Yes, sir. Sir, also wanted to understand that now many toys, ACs, everything is being made in India. Sir, so the batteries that are going into the toys or the remote of the AC, etc., sir, are we supplying those or are they still being imported?
Before I respond to that, I think, I need to sort of respond to that somewhat high-handed comment about your not believing that 53% market share. It is a public domain information. Please go to the Nielsen report and find out for yourself whether what we said is correct or incorrect, okay? Before you make these kind of comments. Now, with also your observation with regard to other competitors, growth, please also find out whether they grew in the battery segment or they grew in some other segments. I think we have greater insight to that than, perhaps, in all humility, I say you. Now, coming to, the question of, all the devices which are there, we supply to everybody, and so does everybody in the market. Thank you.
Just to add, I would like to add one point. I think he has mentioned that our receivable has doubled up. So just would request you to please go through the schedule of the balance sheet, where you will find the receivable from 102 crore has become 113 crore. You are right, in the June quarter, receivable has gone up subsequently, and there is several initiative and effort has to ensure that receivables are under control. So that is the way. Just would highlight maybe that you are referring to some June number, maybe against a March. But as of now, the situation is that general trade receivables are under control, and even whatever has increased, it is because of the alternate channels. Because the alternate channels, the receivable terms are much higher than the general trade. I thought that update will be very useful for you.
So, sir, receivables have actually tripled from FY22 end to FY24 end, from 36 crore to 113 crore. So please check it. And so secondly, if we see our EBITDA, so last year there were 25 crore extraordinary for your consultancy, etc. And if we add that back, there has been no growth or very, very marginal growth, less than inflation even in our EBITDA, Y on Y.
So I heard from you. So I think, when you are commenting, I did not hear that you are commenting from FY22, because generally when you are doing the stock, we have always referred from FY23. Okay, and that is this period, that was the year of a COVID period, where time our 100% sales was on cash. So there's a change of the business parameter happen when because that period, even 2021 and 22, you see both the years were on cash business.